I feel like I found my place. Like all the stars have aligned. Everything that it created throughout my career, everything that I've learned throughout my career led me to this place. And we all feel very confident that this is going to be the way we want to move forward.
John, welcome to the show today.
Hey, Michael, how are you?
I am doing great. It was great to see you at Dealmaker Live. You're up on stage and sharing your story a little bit. We want to get into a little bit more deeper here. Also, more people will hear that story because it's a good one. Let me ask you this. So what made you get into real estate in general, right? It probably started with Rich Dad, Poor Dad or something like that. And then, what was going on at the time? And this may be years back.
This is definitely years ago.
Think about, what was going on in your life when you first heard real estate, and what did you think? What was your ideas around real estate?
Well, originally the idea around real estate was creating real estate. Back in 7th grade, I took a drafting class, and it was the first time I've had any involvement or anything to do with the architectural world and buildings and what have you, and I took a liking to it, and decided then and there that I want to be an architect. Once I figured out who builds these things, who designs and builds these projects, I wanted to be part of that cycle. And so I went to college. I started doing architecture since 91, and at some point, real estate, even above and beyond architecture, real estate, the value of real estate got into my eyesights, in my crosshairs about 20 years ago, when I bought my first condo, and I only lived in it for a year, and then I rented it out, and I realized wow, this thing is appreciating in an amazing way. I'm making money from it. Let's learn more. And so I just started being an avid reader of all things real estate. And at some point I wanted to flip the script and become an owner or part of the GP team. But it wasn't until after I lost my job that I realized that dream.
What happened?
The COVID happened. Everywhere else, I had started a technology company years ago, so I'm used to going out on my own and starting businesses and doing something completely different from my training. I got into the world of the World Wide Web, and I did that for several years. And then at some point, after my first child was born, actually my second child was born, I decided to get back into architecture. So I found a friend of mine that worked with back in the day. He started a business. He needed some help. I was doing some software training. I teach at a couple of colleges in Chicago, and I've always done that, interior designers and architects. And so he needed some help. So I decided, all right, I'm going to freelance with this guy and just, get the lay of the land of how the architecture world may have changed since my hiatus. And one thing led to another, and I was there for 2 years. And I loved the work. But then COVID happened, and slowly but surely, all of the clients disappeared. Their budgets evaporated, basically, and he had to begin to lay off staff, and now has a skeleton crew. And I was one of the people that were let go, and decided to do the real estate thing instead of working for somebody else.
Now, so that's interesting that happened to you. But you could have tried to go get another job somewhere, right? So
yeah.
In other words,
Absolutely.
But let me understand this, John, because I had a similar experience when I was broke with my restaurants and I needed money.
Yeah.
I was thinking I'm going to get a job, and I decided to stay an entrepreneur because I liked working for myself. I knew that with enough work there could be unlimited income potential, financial freedom, all that stuff. Okay. But at the end of the day, you got to pay your bills, right? So what made you believe that getting started in real estate would actually start paying the bills in your lifetime?
Well, in the beginning, my wife and I sat down and, in the beginning, the layoffs happened across the board, across the country in the architectural world. But then shortly thereafter, there was a shortage of people, of staff, because a lot of people had retired and exited the workforce, and suddenly salaries started increasing. So then I started getting offers to come back and work for different companies and work back for my previous employer. But by that time, my wife and I, she's a career coach. She took me through a vision exercise and all this other, work to figure out, where my passions lie. Because having lost that job due to COVID left a bitter pill just a bitter pill to swallow. I was always been an avid student of real estate. I knew that there was value there, but I always was stuck with, a comfortable job, steady income, financial security. But then I realized with COVID, there's no financial security. When you work for somebody else, you're at their mercy. And unfortunately, COVID opened my eyes to that. And having already been through, my own startup and business, I was comfortable with leaving and not returning to the workplace and working for somebody else. But my wife and I, she hit the nail on the head and realized that, my passion through our conversations lie in real estate, all things real estate. And so she asked me, like, what am I missing? Why haven't I done it earlier? And the reason was, well, I don't know how it functions. I don't know how the mechanics of real estate work. People come to me as an architect with budgets, and I spend their money and I work toward their budget. I don't create their budget. I don't ask where the budgets come from. But if I'm going to be working on the other side of the table, I need to figure that stuff out. So I started looking for people in this space who can teach me that type of information. And so I think I found you in October of 2020, and read your book, followed you on YouTube, read everything you sent me, as well as several others. And my wife and I talked about it, like, I think I want to get educated on this work through somebody who's doing it, who has done it, doing it. And I really appreciate the quality of information you put out. And so I decided, well, I'm gonna get some coaching, and I'm not gonna go back to my W-2 job. I'm gonna do this full time. And we're fine. We have a house, and we've got some savings and what have you. But now's the time to do this, because COVID put us in a special place to put a laser focus on our future. And I saw the future as real estate. So did she. And followed your lead and took your mentorship program. And here I am a couple years later, still chasing the deals.
Yeah, I want to get into that. But right now, like, you're full time.
Yeah.
You derive your income from real estate. What is that like? Like, compare that to, when you had a steady job. Like, what is your life? How's your life the same or the difference than before?
Well, a lot of the value that comes from chasing real estate is having control of my time. Work for somebody else, I'm on a 9-to-5 schedule, but architecture being such a draw on your time, it's more like 9 to 7. And the extra amount of effort and work putting into those projects didn't equate to any type of financial freedom. I was still working check by check, paycheck by paycheck. I wanted to invest in something more long term. I'm fine with delayed gratification. I'm happy working on projects that'll take 3 to 5 years to return, get a return on my investment. So I was teaching. I still teach part time, but nowadays I'm more about educating myself, spending time with my family, watching my kids grow. I've got a 5-year-old now and a 1.5-year-old and a 15-year-old. And it's nice to see them grow up while working towards something that'll going to benefit us all through this real estate. And so that's why I spend my days. I chase deals. I work on occasion when I have to make ends meet, but we're focused on this, and we're going to continue doing this into the future, because I see the future in front of me, and it's just about putting the effort in and putting the time into it.
What did you and your wife, it sounds like you obviously, she helped you create clarity around real estate, but
Yeah.
at the end of the day, what was your collective why? when you guys agreed that, oh, it was good for John to get his, education in real estate and apartments, like, how did you sell yourselves on this? Like, what was behind that?
Well, I think we just simply took our careers and extrapolated them out into the future,
Mm.
and figured out that, going on the traditional track of, investment through 401ks or stock market or what have you, um, uh, didn't sit well with either one of us. I thought there was I looked at real estate as the vehicle that most wealthy Americans have gone through uh, to reach their financial freedom. I knew it wasn't going to be working for somebody else. I knew that very quickly, um, and she knew that I was passionate about this work. I love architecture, but I love buildings, and so she knew that if John had the bandwidth to focus on this 100% of his time, we would all be well off financially. We wouldn't have to worry because, once I focus on any one thing, I'm very tenacious and relentless. And she knew that, I knew that. And she also realized my passion. And unfortunately, I set the passion aside for so long because I was, family, my job, I was being pulled in multiple directions. And now I feel like I found my place. Like all the stars have aligned. Everything that I created throughout my career, everything that I've learned throughout my career, led me to this place, and we all feel very confident that this is going to be the way we want to move forward. So we have no doubts.
So you read some books, podcasts. You knew that apartment's the way to go. It sounds like your first step was to get your education, and so you joined our mentoring program. Yeah. Why did you think that was a good step? Because a lot of people says, look, I don't need a mentor. I'm going to figure it out my own, or I'm going to find someone at a local meetup. And why did you decide to invest in yourself in that way?
Well, speed. Everything that's out there that, that your group produces or other groups produce. I mean, there's a lot of content out there in the world. You can find this information on YouTube. You can download all kinds of PDFs off the internet. Sure, you can go down you can take the slow boat to China and learn all this information. But I'm both my wife and I are proponents of self-education and improving oneself. And so I looked at it from a standpoint, well, I can either go to college and get a degree, a master's in real estate development, or I can follow somebody who's actually doing the work that I want to be doing, like yourself, and go down that road. And I don't have time. I'm effectively doing this full time. I don't have time to spend a year or two putting all the pieces together, meeting the right people, when I can just pay somebody and get a coach, which, we all feel very strongly about coaching. Get a coach and have them help me through this journey. Because, the kind of mistakes you can make in real estate have lots of zeros behind them, multi-million-dollar mistakes. I don't want to afford to have that problem. I want to learn by somebody who's doing it, who has done it, and has my back, so that when I exercise these underwriting skills or what have you, someone can look over my shoulder and say, John, you're doing this wrong or that wrong. I want to have that confidence, and that's where we are.
Yeah. Yeah, I love that. So let's talk about your first deal. So I think when you typically join our mentoring program, first you're going to do a lot of learning. You're going to learn all aspects of apartment building, investing, analyzing deals, picking markets, how to raise capital. And at one point, you actually start calling brokers and you start talking to investors. We actually make you do that as part of our program. It's like, yes, you have to do this. Now, so let's talk about your some of your initial challenges. Any kind of limiting beliefs that stand out for you, or like, oh my gosh, I can't do this, or I'm not sure I can do that. I'm not going to talk to brokers. I can't do it. I don't want to talk to investors. Like what are some of the living beliefs that you remember that you were struggling with early on?
Early on, I didn't have a problem with talking to brokers. I've bought real estate in my life, residential real estate, but talking to brokers is no different than that. One of the limiting beliefs was, money, raising the money, that's a big one. Having not asked anyone for any substantial amount of money in my entire life, really, was an odd thing to think about, to wrap my head around. So that mindset shift was really important piece, which is what I figured I couldn't learn that on my own. I need to have somebody who's, in your shoes, show me how you went through that effort so that I can understand the process. That was one of the biggest things. And really the underwriting, again, something I could have learned online, but I wanted a coach to walk me through the mechanics of the Excel, the SDA, and feel confident that the numbers that I put together are realistic and not just fluff,
Yeah,
fictitious numbers. But once I got over those two hurdles, I got a huge confidence boost to continue the work and the effort.
How much money were you able to raise to date, roughly?
We raised $1.7 million in 3 days.
Well, that's very interesting coming from a place of I can't do this too.
I know, right?
I mean, isn't that crazy
bizarre,
to think about
when
it?
I think about it.
It's like our minds simply get in our way of our success. I mean, the question I have for you is, how did you overcome that?
I think I like the idea of strength in numbers. In the architectural world, I'm used to running teams. We don't do anything solo. At least, the way I practice, I work with teams. Engineers, structural folks, civil, landscapers, a team of people come together to tackle a problem. When it comes to real estate, it's no different. So that confidence comes from gathering a set of people on a team that complement skills that I don't have, because I do not want to do it all. And I know my strengths and my weaknesses. And so I try to find people with complementary skills that I like working with, that can complete the team. And once that team crystallized, I was very confident starting to chase deals and making offers and putting in LOIs. And once I had that team behind me and the training combined, then I felt that the sky's the limit.
All right, so you started with John and some training, and then who did you place on the team and why? What kind of roles?
I had
what
asked.
What kind of roles?
I had asked someone I met during one of your online meetups. What online groups are out there that I should join. So I jumped into a bunch of meetups, online meetups. It was COVID, right? There was not a whole lot of. I'm in Chicago, so Chicago was under lockdown. But I went online weekly and I interfaced with these folks, and I met a couple people. One person from California who had been in the real estate game for quite some time. But she was transitioning from an LP to a GP. And then I met another person who was a lifetime fix and flipper who wanted to transition into multifamily as well. And we got together and started looking at deals in Texas, of all places, in Dallas. And then shortly thereafter, I wound up meeting another person from Iowa. Random guy lived in. He and I grew up in the same hometown, but I never knew the guy. But he was a real estate investor in Iowa, has a full-time W-2 job, but doesn't have time to chase deals. So he asked me to come over and take a look at Des Moines. I don't know anything about Des Moines, So I convinced my other two partners that we should look into Des Moines for a potential, area for deal chasing, for deal flow, and Iowa was open for business. Iowa wasn't closed for COVID. There was no mask mandates in Iowa. It's a red state. Wow, this is crazy. And so I wound up taking trips out there every month. It's about 5 hours for me. And so that was my third partner. And then he had another friend who they invest in deals themselves, other types of projects, retail projects and other development deals. He brought him to the team. And so now the five of us liked each other's chemistry, our passion about, chasing multifamily, and started looking for deals in their backyard. They had the relationships and the contacts. I had the time because I'm doing this full time, as well as my partner from California. And here we are.
Yeah. How do you guys manage the relationship? Like, who does what? There's a lot of partners in there.
Yeah.
How do you delineate kind of who does what?
Okay. So my partner, Michael, again, he's local to Des Moines. He's been in real estate for the better part of 3 decades. Again, he's the one with the W-2. So he invests in properties that come to his desk, but he's not overly active because of his job. So he partners up with folks to bring him deals. And he has the connections to brokers, to banks locally, and has a really good understanding of the lay of the land, what neighborhoods are better than others, where rents are better than others. And he also he's a CCIM professional. So he's got a lot of good knowledge behind him. My other partner, Phil, is a CFO. And so we share underwriting through him. He's also a general, his company is a general contracting company. So they're heavy into construction. So now we got somebody with renovation experience, who's a contractor, who's also CFO, understand the numbers.
Yeah.
My partner, Sonia, in California, who's flipping from a GP to an LP to a GP. She has relationships with very affluent folks in California. And my other partner in Michigan, Pat, he has quite a bit of experience in the real estate game of transactions, contracts, transactions, working with brokers, that type of thing. And obviously I have all the architectural experience to vet deals, to tour them and get understanding of what kind of CapEx is required to improve them from day one. I don't need to have a contractor follow me around. I can do the work myself. I talk to brokers and vet the deals very early on, and then I bring them to the team and it's like, hey, this looks like a potential project we should chase, and then we all collaborate on taking it apart.
I can't remember the last time I spoke to anyone that was just a solopreneur in this business. I don't remember. It's so unusual. And I remember when I was flipping houses or in the restaurant business, it was always me. And everybody else I knew, it was always them. And I just find that shift from a team-based approach is just completely different in multifamily, which I think makes it more interesting, allows us to leverage our strengths and partner away with our weaknesses. And I love that. So talk about your first deal. How did that come about?
All right. So Dear America Live, what was that? That was in 2021. I was 3 months into my training at that point. I had landed in Dallas, and I'd already had meetings with brokers in Dallas to try to chase deals in Dallas, one of the hottest markets in the country. But I figured, oh, what the hell? I'll give it a shot. From there, by that fall, I had met Michael, and I started taking trips to Iowa, kind of, my backyard, right? So in the fall, I started doing that. We started putting in several offers per month on different projects. We got one tied up, but we backed out of it a couple of days before the PSA was signed. I'd found some structural issues with the building that I wasn't privy to during the initial walkthrough, and I was like, that's not worth our time. The project that we took under behind me, it was part of a portfolio deal, 5 different buildings, 200 some odd units. Some were exclusively studios. Some of the buildings were exclusively 1-bedrooms. It was a townhouse. There was a 6-unit building. It was a bunch of moving parts. And they all had something majorly wrong with them, because in this market, the buildings are mostly 100 years old, And the one that we saw on this property was from the 60s. It had structural issues with the foundations, leaks. It was a mountain of issues. So we actually walked away from the portfolio. And then at the end of the year, we took a look at it again and like, let me take a look at the zoning, because I know zoning. So I realized that the 6-unit building on one of the parcels was on an acre of land, and the zoning was for medium density. So I quickly realized that I can knock down a 6-unit building and replace it with 16 units. And that works every day of the week. And so as soon as I figured that out and brought it to the team, we were like, yeah, let's chase that deal. Because we were literally looking for multifamily value add deals, and this one just fell in our lap and just got converted into a new build. So then summer we went through the city council pre-application process, which allows us to ensure that the city is comfortable with what we're doing. Preliminarily, without going through official channels, they all gave us a green light on what we were wanting to do. It turned out to be an 18-unit development because we picked up another parcel nearby, and that was the beginning of it. So we tied up the land in November of last year. The raise was in the middle of February of this year, and we're about a month away from starting construction on the land. It's already been demolished.
That's awesome. And is that the deal you raised 1.7 million for?
Yeah.
In 3 days. That's pretty cool. How were you able to do that?
No.
Well, how was that possible that you can raise that much money so quickly?
Well, so in order for us to ensure that this deal was going to work, I had to put a lot of my time and effort into the development, designing it, laying it out, talking to the city, making sure that we would get the entitlements that we needed to make this deal work, while my partner Phil had to run the numbers to make sure that from a financial standpoint, we can get it done for X and we can sell it for Y. So I had already produced a great many drawings, presentations to promote the project, and we started circulating to our network, our friends, people that we knew in our circle. I'm like, hey, we're thinking about doing this deal. We're not starting a raise yet. We're still working through the numbers, but there will be a raise at some future date. But here's what we're doing. And we were just casually sharing with folks that we know in our circle. And so when it came to the time for a raise, I was obviously very nervous because, I hadn't raised before. And a lot of the deals that my partners had were JV deals locally in Iowa. But because of the scale of the project, we need to get outside money to do this deal. So once we promoted it and created our webinar and shared it with our contacts, everyone loved it. Like it made sense to everybody. The numbers look great. They liked the design. They liked the layout. They were confident in the makeup of our team collectively, and so. The problem was that we had we were supposed to raise $1.5 million, and in a couple of days we realized that we were well over that number. It was drastically more popular than any one of us had envisioned. Obviously, a lot of locals participated in the raise in contributing, and we had to rescind the offer. Because we wanted to collect those funds. So we had to rescind the offer, raise the limit, and restart the raise. So we had a month delay, and obviously we're nervous that, well, maybe in a month people might have changed their mind, they might have invested somewhere else. There's all kinds of issues that happen in a month's time. But luckily, everyone except for maybe 2 people, everyone reinvested, and we moved forward. But next time I'll definitely put a higher limit on our raise and not go so low. But we're coming to the bank with more cash, which cash is king these days. And we're proceeding forward with those figures.
Yeah, I love that. And everybody says you're an overnight success, right? You do a webinar and you raise $1.7 million in 3 days. But what I heard you say is that you were telling people about this months in advance.
Yeah.
You were talking with them.
Because we could.
Yeah. But I think isn't that the key to raising money is that you raise money. It's like you dig the well before you're thirsty, right? So you're raising money. Raising money means you're talking to people well in advance. And that's really what you did as well. You were talking to people constantly, almost like reality show TV. You were telling them what's going on. So when you finally did the webinar, they're already familiar and comfortable with you and your team. They're actually really familiar with the kind of project you were doing. So when you did a webinar, they didn't ask you big questions like, well, who are you guys again? And why should I invest in an apartment building?
Who are your partners?
Yeah. Who are your partners? What's your trade? They already knew all that. And I think that really is the key to raising money is that you want to start talking to people in advance. Now, looking back on
your group, actually, you all taught me the fact that, you're not really ever asking for money. You're sharing opportunities.
Right.
I had the mindset that, I'm going to ask somebody for a certain amount of money to invest with me. It's like, you're never asking. You're producing something of value, and you're sharing it with your audience. Whether they decide to invest in you is another thing, but you're constantly sharing opportunities, and it doesn't stop. It's ongoing. The conversation is always what's next, what's on the horizon, what else you're working on. But we're always talking about opportunities. And not asking for anything, really.
So aside from having a higher limit to give you flexibility to raise capital, what would you say it was a lesson learned that maybe you guys would do maybe differently next time?
Besides raising the limit?
Yeah.
I can't say I would change anything, really.
I mean, to me, one thing. Go ahead, John.
Go ahead.
No, go ahead.
Well, I mean, I guess understanding I guess going through that analysis of saying, well, how much could we possibly? What is the maximum amount we can possibly raise, and still have a loan through the bank, and still make it beneficial to the investors? That kind of balance between debt and equity. We could have had more conversations about that from the get-go. We were just thinking about traditionally, we 30% down for the bank, so we're only going to raise X, and I guess we could have spent more time kind of thinking about how the financials lays out.
Yeah.
Stress testing it of what if we take more money? What if we take less money? We would do that. I think we'd definitely do that more.
One lesson, not that you do differently, but one thing you did really well is stay in touch with that deal, right? So there's a lot of deals that come and go for one reason or another. And I mean, I swear we get like 30 to 40% of our deals from deals that went away for some reason. Either someone bought it, didn't close on it, or stood on the market, whatever. And so you stayed up with that, and you were very resourceful in what you did with that property, which was brilliant. I mean, you literally created a deal out of thin air. I love that.
All in all, it took us. I mean, if you think about when we started to look at it, I mean, that's a year went by, and we walked away from it for 6 months, and then we came back to it thinking, because it hadn't traded, because everyone saw what we saw in terms of the issues with each of the properties, but we didn't give up, and we're like, let's take a look at this from a different lens and be a little more creative and think outside of the box. And that really helped us along. Definitely looking in the trash bin is a good place to look for recycled deals.
So what's next for you guys, John?
Well, I've begun to kind of broaden our markets. The way I feel is, if I know a particular market like the back of my hand, and I can talk about the different neighborhoods and the rents in those neighborhoods, and what price per door we should be able to see in those neighborhoods, then I think I've known that area pretty well, and I can move on to the next area. And so that's what I've done. I've met some people, some of them through your program, that are active in Atlanta. I've always liked Atlanta. I think there's a lot of growth left in Atlanta. You all are in Atlanta. I like it better than Texas. And so I started a mastermind group of people, like-minded individuals who like Atlanta. One of my partners has joined me on this journey, and we vet deals in the Atlanta marketplace. And I'm going to pick up another one in Indiana. I'm from Indiana originally, so I'm beginning to look in Indianapolis area where my family still lives there. And so I'm picking up new markets, and shaking the trees and trying to find deals elsewhere besides Des Moines.
Yeah, I love it. John, how can people connect with you?
I am pretty active on LinkedIn.
Okay.
Just find John Manfredy on LinkedIn, and feel free to connect. I have an open door policy. Happy to connect with anyone. Anyone has any questions for me regarding the development space? Happy to answer them. It's not for everybody, but I feel comfortable in this place. But yeah, happy to reach out to anybody and connect.
That's awesome. Well, thanks for being here on the show and sharing your story. It's great having you here.
Well, thank you. I mean, I really got to give your team a lot of props for putting me in the right track. And I'm happy that, what I expected to get from your group came to fruition. So I made the right bet, and I really appreciate all the work you guys do of helping people along this journey, and removing the horse blinders from us all and realizing what we can do with the real estate space. Thank you.